I hope you're well and doing great on this Thursday as we get ready to do what we do best, put the work in, make sure that we have our awareness about us, make sure that we are able to take in all new information day by day and stay on the right side. Macro and TA for fun. Mechanical edge is where it's at. Did you see Ethereum here continuing its upward move, entering the market now? And then you see, by the way, here we go, looking for on the weekly here, potentially here, getting ready on the news that Trump has honed in on a potential new Fed chair candidate, Christopher Waller. We'll take a look at that in just a moment. Equity markets since that hit the wire have kind of topped on today's session so far, but it seems that Bitcoin and crypto are liking the fact that Fed funds looks like that they are headed lower. If you just jump back over here and we just peek at what's happening into the end of the year, you see that right now markets are pricing in pretty strongly two and a potential third cut. Now, this is all variable, and I have to say, ahead of the next Fed meeting in September, we have two more data points for inflation. We have obviously a further jobs number, non-farm payroll, first Friday of next month, and this may or may not change. You know, I can't make a. This is what the market's pricing in right now. Is it correct? Likely not. We have a lot of data coming ahead of the meeting. A lot of people think that now there might be the shadow Fed. Is what Waller says more important than what Powell says? I don't know about any of that. It seems like a lot of hoopla. Powell right now is the one running the show. There's something I just wanted to check out with you. Ready? And obviously the main focus of today's session, and it's going to be great. We're going to be talking about Bitcoin cycle update. Most are misreading this cycle, and we're going to talk about potentially where they're wrong. There are so many dependent nuances to all of this that we have to show up each and every day and put the work in. Boom, boom, boom. All right. All right. Ethereum 2.0 just chasing up top over here just now. Interesting to see the side by side. This is the only question that matters for me for the near term. Whether or not they're cutting into a recession or normalization. This is, and I was thinking about this one. I don't even can't go there. We have to watch the data, obviously, and we've been looking and watching. I'm just going to give you a heads up. And, fast forward a few weeks ago, we were looking at the current episode, and you could see this is the soft data and the hard data. And generally speaking, 40 days later is when you've seen the average event-driven recession and a deterioration of the hard data. And true enough, I mean, we have seen a deterioration of the data. No question about it. Was weird. Janet Yellen, former Fed chair, former U.S. Treasury Secretary, out enjoying Aspen, probably doing some mushrooms. And yesterday she was commenting on Fed policy. I don't remember another time. I'm sure there may have been. I just don't remember another time when you have a former Fed chair commenting on current policy. I've seen them talk about mistakes that were made. I've heard them talk about during their own tenure, but never. So is Janet Yellen now the new shadow chair? Anyway, 401k, not just for crypto. This is huge news for crypto, right? Also real estate. And yes, that is big news. Do you think that's what Bitcoin and crypto are moving off of? Or do you think that because Bitcoin and crypto were a little slower compared to the relentless roll of the NASDAQ yesterday and overnight? And no doubt that is big news. And that opens up the door for, especially for CTM. I mean, because what do I say? What do I mean by that? Well, let's just jump over and now I found the theme of today's session, and that's the 4-year cycle. Bitcoin cycle update, I should say. And it is just making sure we hone in with what awareness we have today. But at the same time, I just meant the flow of where we're going, weaving in and out. We have the ability here in equity markets to trade things like the spot ETF. And we have things like the ability to trade MicroStrategy. By the way, did you see what is developing over here on MicroStrategy? Quick update, TQQQ continuing to hold, right? Now we got some room over here, 34% into profit. You could see NVIDIA is ready to lock in if need be over here, and 26% into profit. And the new, once again, IBIT trade entering the market. But I want to this is FNGU, and we have the ST1 and CTM filters keeping us out. And it looks like potentially rightfully so. Well played over here as it didn't chase markets right now, a little bit on the back foot ever since the Waller announcement. And I want to get back into something, hit on that. So I hope that name comes up again. But here on MicroStrategy, you can see that we have a trend line break. We're waiting on ST2 and CTM 2.0. We have not yet crossed the zero line over here. So we potentially are late to a discretionary entry. That's what I'm watching right now. Now jump back over here and you could see that we are right now into what? We're into resistance, interest in development, and interest in development for two reasons, just to each and every day, just like throwing those little discretionary nuggets. I got one on the NASDAQ I'm going to share with you in a moment too. And I love this one. I was thinking about this one, and you all, when you see it, you're going to be like, this might be the CTM setup. So boom, 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 boom. Please, you know what? I think that potentially up until this cycle, the halving no longer matters, right? And we saw price make an all-time high prior to the halving, not after the halving. Usually it's after the halving of the miners reward. It sends a supply shock into the protocol, and you see roughly 6 months after, Bitcoin able to make a new all-time high because of the supply-demand dynamics. That wasn't the case this time. It was the adoption, the spot ETFs opening up. It was adoption taking place, inflows that caused price to make an all-time high ahead of the halving. And what's interesting though, up until this cycle, if like Plan B's model, right, the stock to flow model, I think it would have actually turned out to have been a lot more accurate if it weren't for the like massive amount of altcoins that were, sent into the ecosystem that took away a lot of demand for Bitcoin. Now, that's what happened. It doesn't matter. And when I say it doesn't matter, I mean, if Bitcoin is the apex predator, then Bitcoin wins. And even if there is, several years of altcoin madness, and back in 2017, it was who's going to be the next Bitcoin? Who's going to be the next Bitcoin? And, obviously that everyone knows today, well, there is no next Bitcoin. Bitcoin is Bitcoin. There is no second best. And if it weren't for, I believe, the advent of altcoins, that took away a lot of liquidity from Bitcoin. In a perfect world, if altcoins didn't exist and only Bitcoin existed, up until this current cycle, I think the stock to flow would have been a lot more accurate. I think it was hard to argue with that, and I think that regardless of it being a very flawed model, I think it helped onboard a lot of people onto Bitcoin. So, look, I was seeing a rejection. So this line that I was looking at yesterday, the structural line, you could see the test into it, broke above. So I guess we'll continue to monitor that. Maybe we could find a little bit of support over here. But the yellow line, the sell impulse, our first warning sign of this trend weakening, has been retested now twice. We still need to get neutral above there to negate that breakdown. If we break the red line, then I'm expecting a leg down. I hope we hold somewhere around the yellow. If we don't, this becomes a legit 15% pullback, and is not the most important line in Bitcoin or anything close to that, and it wouldn't be a technical breakdown, but it would likely mean if we were to break down from there that the extent of the drawdown is going to be longer and deeper. That's it. We'll just leave it there right now. Jumping back over, and I wanted to talk so I could, I always back end everything, right? So this is so important to us. And we've seen over the last week a sincere deterioration of the data. It's going to matter what happens with CPI numbers next week, and then jobs number coming after a couple of weeks, and then back to this ahead of the September meeting. And if those numbers come in strong, not hot, but well, at that point in time, I don't think that they're going to cut in September. That's that seems the market's going against me. Probability suggests that not only is September cut in, 2 to 3 cuts into the end of the year, and it's what happens if the data continues to deteriorate though, and are they cutting into a recession? And if they are, that's bad news bears. And it might be, and we might see further pressure. However, I have a feeling, this is my own belief that I was thinking earlier, that likely if we were to see something like that to play out, it would be one of those like one and done, like a quick event. And not to say that there are not hard times ahead, but I do believe, but I mean, Trump gave us the last week the belief. His market timing is pretty good. It is pretty good. 2018 December buy. That was the bottom. That was the exact bottom of the day. April 2025 buy. That was the exact bottom, or it was a day or two after the bottom. Very very good timing. He said roughly 5 months. He expect all of the maneuvers they're doing to lead to growth, and I'm on that train. I'm a little concerned about navigating this current period because I do believe that the data suggests it significantly matters whether or not they're cutting into normalization and or recession. I don't want to get caught off guard by my own bias, and I have a bias right here. So I'm going to make sure that I use TA ultimately to stay on the right side. And I do think that this time is different from this aspect over here, right? And Lynn's like, look, is this time different? When deciding, is this time different or not, it's important to have the right baseline to compare. And that data, the majority of that data comes from a period in time where we were seeing monetary policy being the driving force. And there was this other period. So is it different? No, it's not different. We're much of the same as we were back in the past now, with fiscal dominance becoming the primary driver. And that is the one piece that makes this all hard. From the recent top, let's do it. So I think what you're looking at and lining up, and so for my eyes, I don't know if it's this or like this. So what's interesting about that, and I'm gonna say I feel, dude. What's up, everyone? I hope you're well. Summer session's here upon us, and obviously that depending on when it broke above, right? I want to get above this trend line over here, the sell impulse, to have us go neutral, and we've been watching that talk, and it came into its resistance again today. And it's just kind of neat. Not because we hit resistance. I don't want to hit resistance. I'm in favor of us not hitting resistance. What's neat about it is that it occurred, like, TA is beautiful. That's all I could say. And if we break, figure out, like, into the weekend, and we break above this line here and we're not yet above this one, well, that's not a clean breakout. We don't want any type of resistance above us for it to be a clean trend line breakout. So we'll have to monitor both of those. So while we're into TA, while we got our TA hats on over here, let's jump back over here and look at what's going on with the NASDAQ. And the lead into the NASDAQ, by the way, is, friend over at Bar Chart is saying that tech stocks are outperforming the S&P 500 by the largest margin since the peak of the dot-com bubble. A couple of different things that are interesting about that. Number one, back in the dot-com bubble, tech did not have earnings. Today, tech has significant earnings. Aside from that, also is S&P 500 back then and today has an entirely different makeup. So now I went ahead and I'm asking, well, how much tech makes up the S&P 500? And it turns out that 35.8% of the index, right? So with 40, I don't know, Grok's throwing out numbers here. 40%, 39%, 35%, I should say. Let's just call it like, I don't know, roughly 38% of the index is tech related, which is interesting then even further, because now you're saying that you have tech stocks outperforming the S&P 500. S&P 500 is largely made up of tech stocks as well. Interesting. Don't trust Grok or anything else. What? I was doing a little research here on Waller, Christopher Waller, with Grok, and obviously LLMs are like use multiple all the time. That's what I do. And they're research tools. The one thing that's different about research tools or these research tools is this. Now, I remember back in the day, it must have been somewhere around 2007, 2006, editing Wikipedia. And back then it was like easy to edit. You could just edit it. And it was a thing on Fraggle Rock and about the doozers who would eat those like little construction bill. Well, the Fraggles would eat the doozers construction blocks, I'll call them. And I edited it and I wrote that they tasted like pumpkin curry, which was obviously false and whatever. It's just fun. And it's a little harder to edit Wikipedia. I don't know if Wikipedia is a trusted source or not, but when it comes to these LLMs, I do believe that a lot of what is said is taken at face value. I do believe that. And this is just a heads up. This is part of CTM, ongoing education, right? How to think critically. And I'm watching as Grok is researching, the Fed member, and he's going through all this data, and I'm reading it as being written. And then it says over here that that Christopher Waller for dissenting on the Fed policy cut. Policy cut. What does that mean? What's that about? Had to go ahead and research it further. And I was like, hey, Grok, Waller dissented on the policy cut in 2004 ahead of the election. And he's like, oh, sorry about that. That's not actually what happened. Turns out he didn't dissent over there. He did not dissent on it. So you kind of have to fact check the LLMs as you're doing your research. You can't just take everything on face value. That's the little note of the day. Bringing us back into a little bit of TA love. Ace, I saw last month, mega amount of corporate buybacks took place. And that was with including a 2-week period, 10-day period of a blackout window. That's absolutely insane. I see that Uber is moving towards what $20 million buyback of their stock, and I'm 20 billion, and I'm wondering, does it, like, when a company shifts heavy into stock buybacks, is that like a different stage? I think Uber is worried that Tesla is not looking for a partnership, and that Tesla plans on eating their market share. I'm looking here at what's taking place and a couple of different things. Purple line, that's as early as we get. We're watching it. I know most of you probably don't like this price action. Seeing a lower high and 2 long wicks over there. And yes, that's cause for concern if we break down from here. And I think this purple line here will be the earliest indication that we are breaking down and that seasonalities have a really strong chance of playing out. Just leave it there. And just jumping down to the 30-minute, and I'm going to go ahead and and remove this line from you. And I'm going to add this line back in. She went to China to talk about monetary policy and did mushrooms. I mean, unbelievable, but that's what happened. I mean, do we live in the Matrix? I mean, unbelievable. That is exactly what happened over here. That's a crazy wick on this 30-minute candle over here. Look at that. Oh, he didn't grab it. I thought it must have grabbed this wick over here to get that type of bounce. It didn't. It didn't. And that's a significant bounce taking place on 30-minute. I wanted to focus in on this. And obviously, overnight was yesterday wound up being a very bullish session. And we had that bullish engulfing. And then overnight, it continued again and extending out up into the New York Open. And everything looked very good up until the very moment that, you know, that it was noted that Waller is indeed emerging as the favorite Fed chair. He met with Trump. Trump likes him. Now, that doesn't mean anything. It doesn't mean anything in so much as that if that's not the choice of the administration, they're just throwing cover right now, and that could very well be. It's too soon to know. That's for sure. Jumping back over here and check this out. I didn't look at this setup like this, but I would like to in the future, right? And I'm just going to draw this line over here. And the important part is when we break above, okay? When you break above right over here, okay? And then you have a retest. And look, the retest comes in a little below the line, right? So I'm going to try, like, what I'm trying to do now is wire my brain for the next time this setup occurs in real time, which it will. And I think this is a fantastic setup. Watch it with me. So you have over here trend line, right? Extend the trend line out. This is real time. I'm extending the trend line out in real time. I'm extending it over here. It breaks up, right? So, that's the best I could draw the trend line. So if I saw that happen in real time, and then I have this next down bar, and then you break up and extend up, I would probably go like this, down like this. And I think that's in real time fair and clear. So after the retest on the move up, I would go down to the low of the retest. And I don't like this, but this is what I would do in real time. And I think that here you have an underbelly breakdown, except that where I thought it lined up when I looked at this is like this. See, this is how hard it is. Like in real time for sure. And this does line up very well for me like this. You have the breakout above, but in real time, I would have got confused over here. That's what's so hard about discretionary trading. I certainly would have got a little bit confused. What I'm looking for is the first and clearest underbelly. And if this were a breakout above and then a retest into that trend line, as price made the new high, that's when this gets extended out. After price made the new all-time high, the underbelly breakdown becomes the signal. Except that if like that looks easy and clear in real time, it would have been messy if I was doing that in real time. And in real time, I would have lined up this. I mean, it's still a good trade, but this is the first underbelly breakdown is right over here. And that's a big difference. Anyway, that's my little something that obviously you've seen for the past year and a half my interest on, and that's why I'm building off it today. I don't like this block over here. I like to make, beautiful, nothing easy about it. All right, jumping along, moving along. Seasonalities, we know. We got these headwinds. 1998 cycle, price was able to maintain. By the way, we talked about it, and it's funny how right over here, look at this. This is insane. On August 13th, you see the high over there. Remember we said, listen, I would not be surprised. I thought it was the 15th. It's August 13th. Insane. It's insane how seasonalities work. I said the 15th. It's actually the 13th, 14th. you know, I would not be surprised if we were trading higher. It's still in play, but most important is that I do believe that there's a significant chance coming into the end of September that we're trading lower than we are right now. There's nothing bearish about that whatsoever. We're also very keenly aware of right now that the Treasury is out there putting pressure on liquidity, and we're watching the repo to see if ultimately throughout this month here in August and September it winds up getting drained. And this drain, this headwind of liquidity, if it indeed during a period when historically equity markets here go into that consolidation chop, if we get a lot more of the same. Now I have to say, after today's price action though, something's a little bit different in so much as that, what's a 3-day here on the daily, if we wind up having two wicks up over here, that's for sure a lower high, and then we break down from the purple, that's when I turn to near term looking for downside acceleration, right? And then we'll have to watch the high. So again, continuing conversation of everything we do each and every day. Oil steady at 64 today. Dollar steady. 10-year also steady. Let's get into the good stuff. But before we do that, let me just finish off over here and just, we have just Ethereum here entering the market. This again, another hot tip. And I have to just point out, we could go to alts, but I'm not doing that. I'm just going to go over here and show you our two alts. And we could see here Solana, and Solana showing weakness. We could see Cardano showing a little bit of weakness, and Ethereum is showing a lot of strength right over here. You can see the difference off of the last high. Ethereum here is riding that. And I had to Ben, and I pointed it out in real time as he said it a couple of weeks ago. Now at this particular moment, watch alts bleed into Ethereum. And I'm reinforcing that because I think it's a really good narrative. I think Ben is really good at picking up narratives and then sticking with them. A lot of people's expectations of how long it takes for things to play out are very quick, but we could see this happening in real time. We also see that as far as buy side boost, right? We see Ethereum now taking a 100% allocation here on this new trade into the market, which means we would love a breakout. We would love the breakout. And is it right now that we're seeing Bitcoin and crypto today fighting in the green because of the new 401k? I assume it's an executive order that allows people to be able to trade crypto or invest in crypto and buy crypto. CTM, this trade, and as nice as IBIT is, and IBIT is wonderful. MicroStrategy is wonderful. Those could already be traded inside a 401k. It opens up the door now that will open up the door for 24/7 trading. And we have templates that are specifically designed when it comes to Bitcoin, Ethereum, Cardano, Solana for 24 hour, 7-day trading. And they have different results than IBIT, and they have better results. So it's a great thing to be able to incorporate that as it develops into our whatever. I was looking, someone not enjoying the session, hitting the thumbs down and breaking out of here. It's just a rare sight, so I was just taking note of that. That's why I stopped over there. I would like to see now, as we're buy side boost 100%. You can see it's a clean line over here. This resistance here at 41 has been going on now since 2024. It's so like resistance horizontal in this case. Bring your eyes back to July of 2021. Resistance there as well, and you could see even further earlier in 2021. Probably I don't know. That's probably May. You could see that on the weekly you wicked above, but that's where the bars came. This is getting brighter and brighter. Big shout out to the Hive Mind. Big shout out to the Silent Majority. CTM strong and looking good. Speaking of CTM Hive Mind, Lando bought out some taking this conversation we were having about gold and the Federal Reserve. It's weird. This is a treasury. Like the treasury gets to do this. It's weird that the Fed is publishing it. I don't know if they're doing that to open up the door for the EU to do it. But Lando bringing this conversation up a level. Look out for that next week. I'll expand on that. Jumping back over here and just enjoying being here with all of you. Let's get into more of our session as we've covered everything. It's so funny, like the session, today's the theme is about the Bitcoin cycle. And it's most are misreading this Bitcoin cycle and talking about like, hey, you're reading it wrong. And we're going to take a look at that specifically and clearly. And that is for sure the theme, but we're a half hour in. It's almost like I need to get everything out of the way, our market review, and then we could go ahead and get in. But it's a joy and it's fun and it weeds out a lot of people. It really does. I think that naturally CTM is able to kind of filter out. We're really good at filters, CTM filters, CTMX filters, but we're really good at filtering out. And I think that this is exactly what happens. So start off with my friend Crypto Burb, and he's talking about we're now 989 days since Bitcoin made the low, November 21st, 2022. By the way, I personally do not think that the low would have occurred when it did if it had not been for FTX collapsing. And I think instead of a 76% drawdown, it would have been, I've done it before, I think it's 72 or 73%. And that might not sound significant, but it is when you're talking about diminishing downside volatility. It's not what happened. What happened was that there was this enormous scam being run by a centralized exchange. And it caused Bitcoin to dive down and make a leg down. So Bitcoin bull markets typically last 2.5 to 3 years, 900 to 1100 days from cycle low to high. So statistically, we're 90 days through the current cycle, and the numbers those numbers predict a peak in the next 3 to 4 months, which could very well coincide with, August, September. Fed begins cutting in September. What's the data going to say? Or are they cutting into a recession? And if they're cutting into a recession and you go just 3 months out, I mean, 1 month, you're off 2%. That's nothing. So I'm counting my finger now to 3 months, all of August, all of September, and into October. That's 3 months out. That's about the window of when, the 4-year cycle could pop. And then at that particular point in time, sorry, I was reading Cabby's comment. I'll come back to that. What's that, Cabby? So, yeah, I mean, is it possible that Fed's cutting into a recession and it's going to line up with the top of the 4-year cycle? It's hard to argue that couldn't happen. It's very real. It's why we pay so much attention to the data and where we are. Speaking of where we are, what's different about this current cycle? This is obviously just viewing cycles. I don't necessarily think that it's correct, but I like all vantage points. When I say I don't know that it's correct, we're viewing them from price after the halvings. But what happened this cycle was a little different in so much that, let me just find it. Like Bitcoin had made an all-time high before the halving. And in the past, you've seen that happen after the halving, 6 months, after the halving, 6 months, roughly 6 months. This one was a little earlier, but of course, this one was the supply shock of the halving of the minor rewards was so much more important. Come over here roughly 6 months, come over here roughly 6 months, come over here before. That's different, and it's different because it's due to adoption, not because of the halving of the miners reward. So is it better to measure cycles off of the low? And you can measure cycles from the low. You could also measure cycles from the high, from where they put the high in. I like measuring cycles from where they put the high in, actually. And I think that they line up better than the halving. But anyway, I think you need to view cycles from the halving. I think you need to view cycles from the low, and I think you need to view cycles from the high. And then I wonder, should you view cycles from the time that they trade above the 7.86 retracement fib? Back above. Anyway, let's go back. Let's continue over here. So what's like looking at this vantage point was really different is that I would not be surprised if they're cutting into a recession, and I would also not be surprised if it is quick and 5 months out, which puts us into November, December, that we're seeing a lot of that it's a benign recession. How about put it that way? That's how I am putting it. But there's so much that could happen, and the macro could change so rapidly. So I have bias. I'm aware of bias, and that's why ultimately I'm going to be watching what happens for very important breakdowns. So far on the Nasdaq, we have the purple line. That's our earliest sign of a first breakdown. But that's not a major technical breakdown, I don't think. We'll continue monitoring it together. So this cycle, obviously, we're looking at very subdued price action from this view over here. And this is where we are, and are we about to enter into over the next couple of months into the cycle top? And other people are looking at it, the 500 days, buy Bitcoin 500 days before the halving and then sell it 500 days after. And if you would have done this and this would have been your strategy, it's absolutely phenomenal, and it's worked out great up until now. And this is something that I've been repeating over and over, and I'm seeing it now repeated elsewhere. And this is just a thought. He might be right, he might be wrong, but he's saying it's sad to think about that some Bitcoiners will get shaken out between 130 and 150,000 with no chance of ever getting back in, which I'm not a believer in hyper Bitcoinization unfolding rapidly. It's unfolding, as the rate of adoption continues, and I obviously like viewing it like this. And but I do believe he's right about that, and I do believe that, and I've mentioned it before, that if you see the move into 130, 150,000 Bitcoin, and a lot of people exiting, they might not have a chance to get back in lower. So that's something that we have to really watch out for. A lot of people are expecting into the next few months for us to see the thrill and euphoria to take place. When you're viewing it zoomed out over here, I mean, we've had massive leg ups ahead, some consolidation, and then further massive leg. We're not having that. We're in this sustainable channel, and the longer we're in that sustainable channel, the better. Now, some people can't hold through a bear market, especially if that bear market is going to see a drawdown of 70, 80%. And depending on their age, it could mean a big. You guys are aware of Tina, Bitcoin Tina. There is no alternative. And then at 17,000, needing to sell his stack, because if it went lower, that's his future. And so again, 53,000, 35,000, 27,000, those were the de-risk points. 17,000 was capitulation. That's what happened. But I think that, and I know, if you're in that situation, there's nothing better than Bitcoin bull runs. You don't have to guess, and you could tremendously over the long run outperform buy and hold. I think that's the best. So coming back over here, though, a lot of people are looking for potentially over the next 3-4 months those type of past behavior. We're not seeing that, though. We're seeing lots of differences in behavior, and I think that even here you could see that just lining this up with the Wall Street, we would have already been entering some upward fastward momentum. You could see it over here prior the beginning of the. Now, again, the Bitcoin Act there's no date on any type of vote. Something like that could be a game changer. But I imagine if the US government is interested in actually stacking Bitcoin, I don't think that they plan on announcing it and then going ahead and doing it. And I think that actually likely that moves are being made, and they're probably unlikely finding a way to stack a little bit quietly. They have said, or it's been said by lawmakers, that they're not going to disclose how much Bitcoin they own because they believe it's a national security threat to do so. That says a lot about how they're viewing what's taking place. But we are seeing some deviation, and I'd be very surprised over the next 30 days. It's not 30 days, sorry, over the next 2 to 3 months, if we were to see some type of aggressive acceleration of the price of Bitcoin, in so much as that, well, that's not what the macro suggests is on the way. This is the Mayer multiple. This is something that's very different. For all those that don't know who Trace Mayer is, he was a very early Bitcoiner. He used to be a libertarian, very into the I can't my pronunciation here. Sorry, y'all. The Mises Institute, and that type of background brought him into understanding Bitcoin very early. He was a pioneer. The Glacial Protocol, if you guys all Google the Glacial Protocol, is the best way to store and hold Bitcoin. And Trace did a lot of early, like I remember with Preston Fish in like 2017, doing like when a podcast and going over stuff. And one of the things that Trace had introduced to, besides like he exited the space. I don't know if this was actually the best exit of all time or not. But anyway, I don't want to get into that Bitcoin lore. It doesn't matter. The trace multiple, right, is just looking at the 200-day moving average, and it's looking about how far above it is. And you could see as in cycle peaks during that euphoric behavior, it's got as high as one standard deviation above. You could see during the not so liftoff 2021 Bitcoin cycle peak. Look how beautiful Bitcoin is. Look at this consolidation. Boom. Boom. Love it. You got to a very elevated level. Right now, it's not at any type of level that would be suggesting that it's currently, in any type of overextension whatsoever. Actually, it's very much within the sustainable channel. So that's beautiful. A huge accumulation cylinder ace leads to, does that lead to something more like this? If it were a huge accumulation cylinder, right? Here's the price of Bitcoin. Accumulation cylinder. Right? Good eye. Jumping back, continuing the conversation. Other things like the pi cycle is also pointing to something different taking place. Again, a lot of people really looking for that euphoric price action to occur over the next 2 to 3 months. Cycle top in Bitcoin, it could align with actually the US entering a recession. Again, it's why I've always said throughout this cycle, a lot of people thought that the cycle top was going to be left translated cycle. What poor analysis that was, right? And so many were embracing it. What poor analysis that was. And here we are now, and we are, right on time as far as length past the halving. And I was like, listen, the cycle high is going to be a lot closer to the 2028 halving than the 2024. But the reason I did that or say that is because I left room for what happens in between. And there's no doubt that there could be rough waters in between, including even like entering into a recession. However, if that were to happen, we have plenty of runway into 2028. That's why I've been doing, there's my expectations and about what happens next, not 2028. A lot of people beginning to embrace it over here. You got Magoo, PhD, Bitcoin 200,000 by the end of 2026 will trigger the bears and bulls. And at this point, again, now everyone's noticing that something's different with the cycle. That's why I said in like most are misreading the cycle, because many are coming into the camp now that wait, this cycle is structurally different. You see people like Lynn Alden saying, "Wait, it's different now, and there's going to be less volatility on the downside and also on the upside. No euphoric moves. We're actually into a sustainable channel." And they're talking about that's happening because of the change of and rate of adoption taking place. Bitcoin is maturing as an asset. We're at $2 trillion market cap. We continue to see lots of adoption events continue. So my belief is that as we enter the hype window, it doesn't happen, and that we continue over here. And this should be a glaring difference, right? And I think that most people into this area will still be expecting a top early 2026. But as we move towards, and I am, I believe they're able to engineer that growth. I believe they're going to pull it off. It's not risk free, and they might not be able to do it. But I am more along the lines of 2028 and 2029 was a mega run. That's that's the camp I'm in. You know, um, and then I've said once we get it to here, and it becomes glaringly different. Check this out. Like if you see this to happen, and then as you're past right over here after the halving, past 500 days, never has a cycle been able to trade above a previous cycle when aligned from the halving. This would be, we had the Bitcoin making all-time high prior to the halving. That was a very like check mark towards 4-year cycle behavior has drastically changed. This would be another check mark. It's never happened before, right? And then you could see that what was different about this previous cycle was that it came up very strong into the halving. Now, I think that if we didn't get the global lockdowns, that this cycle would have been a little bit higher into the halving. But that's what happened, and things happened. And we had actually, they locked us down. They locked down the whole world. But I'm expecting something like this to be taking place. Yeah, and there could be boom, 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 and then coming in higher into and towards 2028. So is that a sideways PA? Look, Bitcoin just during April, during the NASDAQ 30% correction, put in a 30% correction. If equities at any point in time go south and tumble, Bitcoin's it's not immune, and it's gonna tumble. Now, you know, we've is the NASDAQ going to be off 60%? Is Bitcoin able to maintain a 1-to-1 ratio with the NASDAQ? It's very important the next time we get a pullback on the NASDAQ, because then we get to gauge how Bitcoin's acting. As we're seeing, I just wanted to get a little check on price over here. NASDAQ just now holding on to unchanged, and Bitcoin green. Could we see, is this the Waller effect? I would love to see. I don't think it could happen. Or is the move of opening up the 401k, is the accelerated and continuing, adoption movement going to actually cause Bitcoin to actually decouple from the NASDAQ? I was very happy to see, as NASDAQ corrected 30%, Bitcoin correct with a 1-to-1 ratio. If we see NASDAQ correct 20% and Bitcoin only corrects 15%, that would be a huge signal. I don't know that would happen. And I don't know, what are the odds of the NASDAQ correcting 50%? I think that they're extremely low. So do you think Bitcoin is going to correct 50%? Now, that's all from where we are today. From where we are today. We'll take it as it comes. If you haven't hit the like yet, go ahead and hit the like button over here. The pi cycle top indicator, which is currently suggesting now across at 500 and 4,000 Bitcoin, and that's that variable too, right? And the longer we stay within a sustainable channel, the higher that will get. And of course, this is something that actually, not that it needs to cross. And this would become if you hit, like, if this is in the next 2 to 3 months, the top by and Bitcoin doesn't make it above 130, 150,000, and then goes into a bear market, and the bear market is a 56% pullback. I mean, this thing never crossed, and obviously you all know my feelings on the pi cycle indicator, and it crossed over here in April. Price made a higher high in November. If the Fed didn't pivot, if uh, FTX wasn't selling Bitcoin they didn't have, this could have went significantly higher, and this would have been a very poor signal. So that's my feelings on that. But I'm just pointing out, Cole pointing out that this is something else that's been different, that nothing like this in previous cycles. Looking at accumulation addresses that buy and hold Bitcoin and they don't sell it. And you could see that this started being different over here, and it's massively different today and where we are. And it's beautiful to see old G Bitcoin that was held for a long time now being put into treasury hands, that expectations are they too are going to be buying and holding for a long time. The changing nature of the cycle. It should be apparent to everyone. It's not yet. But again, I put out some markers of when I think that will be. And the next major marker will be the summer of 2026. And then another major marker of when this is. It has to be different if you don't blow off in the next 2 to 3 months. That will be one indication, of course, that this continues to change. If you moved past the 500 days, and that's variable, you move past the 500 days, both of these. So we'd have to say something like 700 days, give it a lot of room past 700 days. And, you just continue checking off things that are different and changing. If we trade above a previous cycle after, it's never happened before past 400 days. If it happens, 700, 800 into the cycle, that's something that's majorly different. These are the things that we're watching on the changing nature of the cycle and its behavior as we've entered into the early majority. And right now, it should be crystal clear to everyone the changing nature of the adoption. And by the way, we still have things like this is just from yesterday, and you're looking at asset manager holding will buy up to $640 million of Bitcoin for its treasury reserves. And this is just the retail of today's cycle. But the retail of today's cycle, it's every day a new day. And it's, between 200, 150 million, 500 million, even up to a billion. And it just continues more and more. Anyway, that's our presentation for today, everyone. Tomorrow's Fun Friday. I'm not convinced that we're going to have a session. There's the possibility and potential we do not have a session tomorrow. I'm going to leave that open, though. And I 50-50 as of right now. Or 51, 49%. I'm not going to tell you which way. Everyone, have a beautiful day. CTM, strong. God bless you all. Be a joy. Lots of love, everyone.